And welcome to pick 27. And while the deep freeze has kicked up in here in the Midwest, we have the market heating up, and so we want to take a look at today's pick, and it's going to be a bearish position in Express Incorporated, ticker symbol EXPR. Taking a look at the proprietary risk reward ratings here at Tradespoon, we're at a level 4 for risk and reward, and we're at a level 3 for value and momentum. And if you want to dig some deeper analysis from our Tradespoon proprietary fundamental and technical reports, you can always click on this icon and you can take a look at these free reports, and they're very detailed and worth a read. Let's take a look at the price action. The closing price, $17.75, off the 52-week high of $25.05, and right off of the low of $16.34. We have seen a pop in volatility and implied volatility of the options, and it's actually at that 50% level, so that's very interesting. And for you option traders, that could be a very interesting point, especially if you're going to look at any type of credit strategies. The return on capital for the option strategies, as we calculated here, and you can see it by hovering over the question mark, how we actually calculate that, is 43%. The probability of success for this particular strategy, meaning touching your profit target area, is right around 60%. And the estimated move is being calculated at right around 70%, and that's within about 50% probability of the expiration date of 2/22/2014. Let's take a look at the stock trade. We're looking to sell stock. We're going to put it in a sell short at a limit price of $17.75 or better. Once we are filled, we are going to put in a target gain price below our entry price on that short, so it's going to be below, and we're going to put that in roughly at $14. And you, again, can use risk and capital management that might fit your risk tolerances and objectives, but we're going to put a buy to close, and that's going to be right around $15.50. We're going to take a max loss if it is trading at right around 20 bucks. That's $2.25 ahead of our entry price. So we'll have a buy to close at around $15.50, and we're going to have a buy stop to close at right around $20, and we're going to do those both good till cancel, and those will be set up as a one cancels other. Now, your options trade is buying the $17.50 puts, and the price that you're going to pay for those puts is $40, which is your max risk, and that's going to be the total loss that we would take if the stock were to stay above $17.50 through Feb expiration. Now, the profit target on this particular put transaction is going to be our entry price, 40 cents, plus a target gain of 40 cents. So that means 80 cents. So we'd have a sell limit to sell these puts if the $17.50 puts are trading at 80 cents. Now, for you spread traders, we're going to be looking at doing a call credit spread. And as I had mentioned, we've seen that implied volatility has popped off of its 52-week lows, about up 50% off of those lows. So we're going to take a February 17.5 20 call spread. We're looking to sell the 17.5 calls for 75 cents, and we're going to buy the $20 calls for a nickel. That's a $2.50 spread, and for that $2.50 spread that we're selling, we're going to collect 70 cents. That means that our max loss is going to be the difference between the strike prices, which is $2.50, minus the 70 cents. Excuse me. So you're basically looking at $1.80 total risk. That's if you wanted to risk that whole amount of risk capital. In this case, we would cut out of this trade. In other words, we would put a buy stop above this market at around $1.40. In other words, we would take a 70-cent risk. So you take your entry credit, and then you're going to add the max loss, which is 70 cents. So that means that we will cut out of this spread if it is trading at $1.40 or higher. So we put a buy stop limit at $1.40, good until cancel. And again, you can always use our proprietary virtual trade here at Tradespoon. Now, taking a look at the stock chart, the stock has been pretty much so flat in a very defined range, but it has been challenging its moving averages. Also, key stock events. This again is where we want to take a look at any fundamental technical events, especially earnings or things of that nature. And you see that they missed their earnings estimates here on 126. All right, they have a hold rating and volatility has increased 50%. The short-term indicators support a downtrend. You have news and commentary, so this is where you can look at the results and the playback on that. And as always, if you ever need any help, you can email us at info@tradespoon.com. Well, that is for today's pick, January 27th, Short Express, Inc., ticker symbol EXPR. And we'll see you tomorrow. Have a great trading day.